This is how to maximize your those of us who have what's it called? A free TradingView account, and you are in ecosystem Plan B Express, in that Felicina group of Plan B Express Cash Flow Solution Club. And you are using free call it for me, free um TradingView account. And you do. And one of the things, remember, those of we are trading and we trade with scalping strategy on gold, like this with the psychological level. Now, by the time you go on a higher time frame, your psychological level will confuse you. Look at it. Let's go to 4 hours now. Come on. Yeah. So it's going to feel everywhere. So you see something like this. Oh, this is disturbing. You understand? So this is your working environment, day trading, scalping environment. Do you understand? Now, all you need to do is very simple. Go to your watch list. Follow me very quickly. Go to your watch list. You see that? So on your watch list, you have gold. Now, if you go to your watch list, click on this plus sign. See this plus sign here? Click on it. Okay? So if you click on this plus sign, then search for XAU. If it's both Bitcoin and gold, those are the tools you want to do. If you check this my own now, what is it? XAUUSD spot. It's on FCM broker. Just locate another broker that has gold, right? You can add Oanda, you can add capital.com. Do you understand? So let's go there. For instance, I add this capital.com. So look at what's happening. It's just for you to go to the capital.com. Do you understand? Very simple, right? So this is going to give you a plain and a clean working analysis environment. So this is where you do your overview. So you take notes. So if you like, you can label it if you like. Okay. So you can do like this. Let's go. You see now? So if you like, you can do like this. You see this place. Okay, you have DXY. So if you like, you can do like this. So right click and click add session so that you don't want to disturb yourself, right? You see add session. So you can call this one. So I still right click on it, rename it. You can call it, right? Anyone you do, so you can call it, what do you call it? Top down. Okay. Top down analysis. So top down analysis, right? Then you can come again, add session. I see now? So you go to that add session, you right click on it again and rename it. Scalping environment. So whichever session. So that means if it's where you are doing top-down analysis so that you won't obstruct your setup. Okay, you won't obstruct your setup. So when you are here, you know you want to do pure analysis. When you are here, you know you want to do scalping. So the same thing if you have Bitcoin like that. So okay, look at this Bitcoin to have something like that. So I'm going to go to just to add, I'll go to Bitcoin. So if you look at this Bitcoin, I think it's on Binance. So I go to plus and type BTC. Do you see that? And now, so let's scroll. The BTC that is here, I'm sure it's going to be Binance. Okay, Binance Tether. Just to know. Look at it. It's Binance contract. So I'm going to add Binance Tether. So it's going to give you different environments. Look at it. Can you see now? So what do you want to do? So look at it, it's down here. So all you do is to take it up to that your top-down analysis. So let's go there. So you click and drag. So if it's dragging you too much, you drop it and wait again and click again and drag. So if you look at the top-down analysis, I have what? I have gold there, and I have what? Bitcoin there. Now when you go to scalping, so if you like, you can separate. So okay, even scalping, you can have this. You can see your all this your or psychological key level. So this one you've not put anyway. So, but I'm just showing you now. So if you want to do the same thing on these guys, you can do that where you're doing analysis, maybe US 30 and NAS 100 if you trade it, and Euro USD equally. If you do that where you do psychological key level for it, if you do, then so you just so that you will not need to think, hey, how do I upgrade my account to a premium account where can have different layout. So you can have several layout because you are using free account, but you can devise a means. So this is it. Very simple. And so let's quickly look at so let me do one simple analysis now. This is gold, my usual way. I come on the day, my usual way on gold. So there are fundamentals today. I wouldn't even know which one is this. Oh, I think there are very strong news today. If you go check FMOC, wow. This is crazy. That's a terrible news today. So you gotta be careful. Okay, so now let's go. So here is gold. Simple analysis. Some of you in our ecosystem, you know what we do. Now, what am I going to do, Felix? Yesterday, you can see the market have been choppy, very crazily choppy. So I'm going to take my horizontal ray and check my previous day high and previous day low. Very simple. Now, so there's something here because this gold now, since you have this like a doji, so you need this market to either take out this high and sell down, or take out this low and buy up. I have this low since that it has refused. This is a pivot point. I was telling us the other time that I need gold to come sweep this liquidity, even this one, and then buy up. But it has never done that. And then what next do I want to do on daily time frame? Look at it temporarily. This is optimum market. Now, this is optimum market because this is the highest market did. So sometime you probably want to look at fib level to see, will this market actually make it up? So market is actually at a very dangerous point right now. And now if you look at it, so if that is the case, I could check something like this. So market, another block. So these have been tested over and again. Of course, this fair value gap, this sold down. Do you understand? These have been mitigated, but getting rejected there again. However, we actually sweep this liquidity and now struggling here. So now this is the point. I've gotten to an extent market activities. So here is this. Now, what do I want to do? So look at what I want to do. You want to look at the structure perspective, the structural perspective. This was a high, right? Right? So as the market deal down here, so created the high here, and you have this, and I think it was mitigated if we're not mistaken. Look at it. That was purely mitigated. That's a nice one. So let's take it from the roof. It can form a support. That's good, right? Now we broke that. Then the next one was this. So that's another high. Yes, it was broken, even though it was like just a sweep and back to this point. So what are you looking for? So looking for several things here. So many things available here you're looking for. So here you have so many reference point. Here is a reference point. And I think it has not been mitigated. You start. So that's a reference point that has not been mitigated. I can put it to 1D. Let's go there. Here. 1D OUB. UOB something, right? It has not been mitigated fresh. And so you have another reference point here. If you spread it out, I think it was tap into. Then we have another reference point here. So now we're sitting on a very time bomb, okay? So now if you go to on daily 4 hours, I'm doing top-down analysis. That's what you are doing because this your market is clean and you don't want to mix it with so many things, okay? There you go. So 4 hours. Now on 4 hours equally, if you track from the bottom here, you have your 4 hours, right? So we have it down here. This is the market structure shift for 4 hours. You're refining market structure shift. You are back to the source. And then we broke in another structure. You are back to the source. Very fantastic market. You have another break. This was a massive break. This sounds like another break of structure. Okay. But the point is that you still have this source that were virtually mitigated finally. But these are like internal structure because this one traveled down, this become an internal structure. But that was a structure that time. You broke and you broke this. So what caused this reversal? You could find a break of structure here and a high, a change of character here, and return back to the base. That was a massive sell. You get this thing now, don't you see it now? Now, this is a breakup structure, but an internal structure. Do you understand? So breakup structure and internal structure, which ordinarily, what happened? You're expecting this market to come back there and mitigate it. So break here. So you want this market to get mitigated and travel up. Never did. So you left it untouched. And then you have another breakup structure. So this is the highest. And then we have a market structure shift. This is 4 hours time frame, guys. That's a high time frame. So you have this breakup structure, and then we have a shift market structure. This is purely breaker block. Now, this is a breakup structure, right? And what you want is the market to return back here. So here is a breaker block, which is a very fantastic one and a strong market entry for you ordinarily. So here, form a breaker block. So here, market structure shift. So what you want, nice one, is that market return back to this order block, which it did, and gets rejected probably at this breaker block. So you are looking at two things, the order block, the breaker block, whichever one functions. So, but we saw that there was a nice rejection overall. And so even when you don't go to lower time frame, but you definitely need to go because so that you can refine your market entry. This travel down, massive. Remember, there was another block here. It broke it and returned. And where was it targeting? Where you have forgotten before. So probably you have this somewhere here. So you have forgotten it before. That's why it's good to do top-down analysis. So you have forgotten this guy. So when it returned here, if you didn't mark it, or if you do not have the psychological understanding of what is going to happen there, definitely when this market gets here, you lose guard. So now what happened? Remember, this was a breaker block, right? This was a breaker block. Why? The market ought to take it and bounce, but just broke it and reject. So continue to sell down. That was a massive one. So when you are buying, you are looking at that point to be taking profit or targeting another thing entirely there. So make a lot of sense there. So, but it has now formed the external structure that was left behind here. Oh God. Trading is fractals. Price is fractals. So you have to understand how you follow trade and market. Here, the market returned back to this point, and we traded all of this. Many do not trade it anyway. So the market returned back here, and then we have a very nice one and bounce up. So here was another rejection because of this breaker block. All right. And if you now look at it, what does it work with? It works again, apart from the breaker block, something massive you probably wouldn't see is a massive fair value gap. So this massive fair value gap, and if you take even your Fibonacci retracement, from here to here. Okay. Yes. I think we have it at 50. That's a premium. So it's a premium. So there are so many things that align here that form a kind of external reference point for you. Number one, you have a breaker block. Number two, you have a fair value gap, and it's at a premium. So that is a very good sell for you, selling point when markets react there though. So you want the market to react there and that form a selling point. So now, as you sold down, you are looking here, this was already mitigated, it become a support. So the support on the demand zone, because markets actually shifted from here massively. So it's become a demand zone. And so the market traveling back here, you can see struggle over time, but never made it to this point. But there's something you do not understand. So since this market was doing all of this internal movement you're seeing is still an external movement to this one. It's still to target this one and take it out. So you have this. So you won't forget this buy side liquidity. So the market return back and create all what you want to create. Of course, start forming different things altogether. So internally, you're looking at it here low, and then you want another structure is being formed here. So the market just did all what you could do, and of course, and move straight up to take out this high. Now we are now in the battle of this one. So this is the battle you're facing right now. This battle is this. If this market had broken this structure on 4 hours, what are we expecting? Very simple. We remember you still have this other block that is unmitigated, which is on the daily time frame. Now, so all the journey the market took care, you have a lot of reference point as regards to this external structure. So you have this as another reference point here on 4 hours. So you have this as a reference point 4 hours. You have this as a reference point. So which coincide with this. So it makes sense that every reference point here can be taken. Then you can just change the color to understand the reference point. So I can call it 4 hour reference point here. So that when the market turns it inside this place, you know what is it referencing. All right. Because we have a fair value gap, although that the market come in to mitigate here, which is this a reference point, you remember? So this reference point had actually been mitigated, so I may not too need it because this is fair value gap and this is an error reference point, another block that has been mitigated. So I don't need it so much. Good. So what happened is this, the market travel up and now this is a break on 4 hours. I haven't broken this. Now this is a reference point for that same 4 hours. It has not been mitigated. So you have a lot of things around here. So I can have this one and then put this one 4H, 4H, UOB. So probably you want to change this color to something different, maybe turn it to black. Okay. Do you get it now? So this is it. Now the market has traveled, and then we have this is okay. That's the breakout structure here, and all the journey up, all the way up. Now, so here it's a reference point. You have another reference point here that was obvious here, and this another one, major one. Now, so this reference point here, as you can see, on 4 hours, as you can see on 4 hours, what happened? The reference point have been tapped into. But now, why are we struggling? We are still struggling because after this tapping, we're supposed to have traveled and break this. Both. So breaking all this is very important for us. And remember, we have up here where the market actually have the major point to break out of this circle. So now the market is doing what it's doing. Now you have done all this detailed analysis, and if you want to still leave this, you leave that because of probably to form support, or you can take it out because it has been mitigated. So now you have liquidity here, you have liquidity here. So you have so many liquidity sleeping here, even here, till this unmitigated and we have a fair value gap. So the pressure or the attraction of the market to travel is poised to come down. Do you understand? It's poised to come down before it can have a major breakthrough. It's poised, just like what it was doing here. So this market is poised to what? To come down. So that means give and take. You have a lot of places you have reference here. So remember this one just a support level around the demand zone. right? So here are other blocks unmitigated. So there are no volume actually, so no pressure and all of that. So, but maybe when the news come up, you're likely going to have gold pushed down massively into all this point. So very important. So here you have this point to be taken. So are we going to take it? That's a question. So that means invariably you just have here reference point as it were, okay? So that means if you look at it inwardly on your 1 hour, on your daily time frame and all of that, you're having something like this. Okay? So if you now look at it, your movement of this point to this point as a kind of dealing range for you, then look at it here. This is 50% level aligning with this daily order block, unmitigated. So you are poised to have a market moves down to this point. So we have a fair value gap here. So you have this 4 hours unmitigated here. So in between this place, it's a very critical region that the market could travel to. So you have to be very attentive. Either it just sell massively there, you don't need to be scared. You just need to take your position when it travel here. Don't believe and tell everybody the way they say that the market is crashing. That's not true. So you will see that you are doing more of expanded analysis and waiting market to actually pause. So you have a lot of places that a reference point that the market need to come down. So that means gold is on the way down before a massive move up. So if you go to 1 hour, probably you're going to find a different reference point on 1 hour. So on 1 hour, you find here. So I probably may not go too much detail now on 1 hour. So, but you have this a break of structure. So, and on the same 1 hour, this is still very massive external and internal kind of structure. So I wouldn't go there so much so that we will not get confused as much as possible. So here we have this. Okay, so let me take the Fibonacci retracement key over. So if you take on gold right now, 1 hour, you have high here, a sweep of liquidity, you have a low here, a break of structure or change in character. Then you have the market traveling. So all of this is sweep of liquidity. That's a stop hunt and all of that. So everything still boils down to we are going to crash, right? So let's go to 30 minutes. Now, this is a place where you'll be doing all of those small buy and selling, depending on what the market is dictating at a given point. And that happened here. Remember, that was a break of structure on your higher time frame. And then you have a high here, you have internal low, you have a major low here. So if you have a major low here, so it ought to be in this way. So you have a major low here. This is like a market structure shift. You have a market travel on back here. Then we have a very massive one, a break of structure, a stop hunt. All right, this is stop hunt. And take out this sell side liquidity, buy side liquidity. For that a point of aggression and all of that. So become a buy side liquidity. You will be saying, okay, what of this one? Yes, of course they are, but this another the closest established aggressive buy side liquidity. And then this was hunted. And so most time we don't look at it. And after it get hunted, again, he came back here, hunt this one. So this is delivery. And after hunting it, we have a move back, massive one. Then this is another wicked thing, creating almost equal high. We have returned back here. We hunted this. Okay. And then the market. So you should have, so we have this one now left as a what? A sell liquidity after all this, but are supposed to have a proper delivery into this one. So invariably, you have a lot of factors, confluences that will bring the market down, right? And now if you go to 15 minutes, the same thing you're going to find, right? Because sometimes you just stay static. Market is dynamic. We have a high here, a kind of internal low, a high, and then we push up the same strategy just fine. The difference here is that we create another internal structure. Here you have a high, and then we create a low, but we have it hunted, and that's a break of structure there. right? And so what happened, then we have a market structure shift. So you expect the market rally back. Okay, of course, cannot do that. This is still the external. Then he broke it as a pure shift in structure. Then we have a return back here. But this is the challenge here. The same thing. After all this, he left with double top, that is equal high. Gold is good at sweeping liquidity at all of those regions. They are internal liquidity. Now they got swept, and then we come back here, sweep this side liquidity. And then the same thing just repeated in 15 minutes. The only difference is that you could see more, and then you'll be able to take market in their small little litmus paper. So I'm not going to go below this. So this is where you now go to your right? So if you leave this now, so if you go to 5 minutes, so that at your 5 minutes now, you don't need this place because you are going to spoil your job. So you just allow it to stay at your 15 minutes. If I want to still go deeper, I can go deeper, but this is a choppy market. So that's where our tool work for us here. So you're now going to scalping. Can you see now? So I'm going to your scalping. You can take market as you like. So if I go to 5 minutes and I'm not seeing what I'm looking for as much as possible, I can go to 3 minutes because your tool give you all of those things. We're saying more. Well, if market is so choppy, then you want to find your tool in those reference points. All right. So by now, you will have been able to take a trade from here. Another day, extremely choppy, 3 minutes. 1 minute will perfectly work for you. So, but you will not get, lost. And look at your 3 minutes. Obviously, you're following, right? The market continue to do what it do. This is part of three, obvious one, a high rejection, and then the close of it, your entry, and then you're targeting 50 pips, 50 to 100 pips. Perhaps because here is another psychological level, then you probably will be targeting it. So if you look at that now to target that, right? But you have to create a specific time that you are actually sitting in the system to do all of this one. So probably you'll be targeting, and if you look at it to this point, it's almost 1:3 risk reward. But remember, what we always target is 50 to 100 pips, depending on the space and allowance that can allow you to get that done. All right. So this is 3 minutes. So by the time we use our tool, you can find. So if you go to 1 minute, that's another good reference point for you. You are just catching the movement, but you understand that the market is choppy. And then at a point when you finish this, you can always just step back to your pure market analysis. And then you can see this one. Imagine 1 hour, 1 minute, creating a structure, a low, a high, yeah. So a high and a low, and a high and a low, take out this liquidity and continue to sell. So a lot could be here and get carried away without even knowing where is the what going to eventually. Okay, so now let me just quickly show you. Yeah, so let's go here. Okay, so if you look at it now, your tool that you're using to manage your scalping, you see, give you a buy here, give you a sell here, give you a buy here. And this buy here, you will have entered your stop loss. This one, you almost stopped out, eventually delivers, right? This one, and this one, stop loss here. Now, of course, targeting 50 pips because here, if you look at this one now, your stop loss is here. 1:2 risk reward. If you even want to do that, if you're targeting at 50 pips, you can be good. But if you're targeting 1:2 risk reward, that's going to be about 30 pips you have done. So this is where you see a lot of people say, how do they do 30 pips in gold? How do they do 20 pips in gold and all of that? This is the scalping moment. So if you go to 3 minutes, it's going to give you more broader perspective. So you can see 3 minutes, which I think 3 minutes may reduce unnecessary stress for you, right? So here you have this. So this is 3 minutes. And then that means you're having something like this here. Stop loss above the wick. And then, of course, 1:2 risk reward could be somewhere here. Okay, that means that is taken. But for tolerance, because sometimes you may not enter on time, so let's just here. And it's doing all of this. So if you stop you out, no problem. But you're just waiting to see how price deliver for you. So look at this one. So imagine this one. Here you have it. And then entered here. Your stop loss here. So 1:2 risk reward. Let's look at it. It's already done somewhere here. Now, which is going to go the like center or the second level of the secondary level of your psychological level. So if that is the case, you've done 50 something pips already. And then this is why we always call about DCA. Definitely when the market got here, this is another power of 3. You want to take a trade. So just know that, of course, we're going to lose some trade. Because you want to take a trade here already and targeting 1:2 risk reward. The markets didn't get there before it starts struggling to. But sometime when it starts giving you a reversal point, you want to take a buy. So 1 minute, 3 minute, 1 minute, 3 minute, 5 minutes can form your scalping with the psychological key level and you're fine. So the same thing with Bitcoin. You can see that, right? So look at Bitcoin, look at your psychological level. So look at our tool, your scanner give you buy here. Once it give you buy, you're working with your strategy, you take an entry. Look at it. So below this, come on, this is already 1:3 risk reward, ladies and gentlemen. Okay, that's already 1:3 risk reward. All right, so it's not difficult. That's what it is. And then you can work out strategy here. You can make a whole lot of money. If you go to 1 minute, if it's going to be too noisy, sometimes your 1 minute may be too noisy. Why not? You can do so 3 minutes. 5 minutes too is a good deal. But if the market is too choppy, it may take time and then may not give you what you want. But I don't think it's too bad. Look at your 5 minutes here. Look at the buy. And then your stop loss below here. The side you must see is that if you want to scalp just to take some profit, you have to be in the market. So that as soon as it happens, instant execution. So look at this one, 1:5 risk reward. Amazing. Amazing. Or sometimes you can even leave it. One thing I've discovered about this tool again is that, do you understand one thing? Do you observe one thing? One thing I've observed in this our tool is that you can even trade, you can even take the market. Let's say somebody who sold from here may decide not to have taken profit until he sees another buy. Do you observe that? Let's look at it. We sold from here. Your stop loss is here. So what we in Plan B Express, we always target the psychological level. So if you're targeting psychological level here, this is 1:5 risk reward. You are fine. Then if you now want to wait until you find, and I'm not sure you give a buy entry here because if you don't, it's going to put it. But you now, because of our power of 3, you may want to enter here. Do you understand? Because I think this at psychological level, you are not wrong trying to find an entry here, number one. Number two, you're not wrong stopping your trade because pushing back. You are because remember you are scalping. You are not in a trend market. So you can't just say, "Hey, I wouldn't have." No, you will have. But imagine you are now saying, okay, I want to be so stubborn enough until I see a sell, a counter signal. So your counter signal will have been here. So look at when this guy says stop, maybe that's when you are exiting. Oh my word. That's going to be how many percent? That's going to be 1:13. Jesus Christ, my G. All right. So that's one of the things, and that's what it is, So you just need to understand. So you can navigate through all of this. You can see this one is still struggling. Yeah. So probably, maybe, I think you should expect it come down here. So most time you can get stopped out to being stubborn to want to do this, but I think it works a lot. A whole lot of things you will want to. So go to 3 minutes. See, it's still struggling. So go to 1 minute. It's right. So now on 1 minute, you see this sign, it's a sign of like I want to bounce. So this may bounce you and return back here because this is a sign of I want to bounce because of our tool we use. So this is a powerful scanner that we use. We have a lot of scanners, and that's what we always recommend for anyone who want to enjoy all of this scanner. Either you come into Plan B Express Cash Flow Solution Club, or you come into Felix Inner Code trading inner code. So if you are there, you're able to learn all this. Then these are simple things to trade. You have catch what you want to catch for the day or for the period. You stop. It's okay to have a nice time and all of that. I hope I've communicated. So look at this now. Look at for Bitcoin. Now that he has given you a buy, but this is 1 minute, right? So if it's 1 minute, you are working with fine. Now that he has given you a buy, you enter. Okay, look at it now. Okay, it's another thing is that you see this signal when the trend of a reference point, because you see one reference point we're having here. This is a demand zone. Now, it's already say you should buy. Sometime when I enter this type of trade, do you know what I'll do? If I enter here, my stop loss is going to be below this demand zone because chances are there that this market will return back to this demand zone. Are you following? So if you return back to this demand zone, imagine if you put the stop loss below here, you're going to be stopped out. But see, if you have a reference point, that's advanced thing you need to learn with us. If you have a reference point below here, then you have to be conscious of that reference point. And these are external reference point. This is a demand zone. You saw that impulsive move of the market away from there. So that's an external reference point. Sometimes I want to wait. So if that signal is at the point, reference point, and all of that. So if I enter, my stop loss is going to be below the external reference point, which is a demand zone. Do you understand? So I want to put it there. Then when the market come there and still give me more, then I want to DCA more position. So after that DCA positions, then as it's riding up, I'm good to go. So if you look at gold now, can you see what I told you? That this is a reference point. This is a demand zone. So I can equally use my demand zone to find an exit because I see that the market. So you can scalp gold and Bitcoin and be very fantastically fine in your trade. Just avoid when news is now coming, you stop scalping and face normal trade direction so that you will not be witch hunted by those massive movement, as it were. Is that got in place? Oh, okay. So I need to go back to the scalping place. So you see what I was telling you, right? So here, this is an additional reference point. Can you see now? So, but if you don't know, you don't know. If you don't know, you don't know. This power of three, perhaps, So you can see how we use this thing. So imagine if you don't do this here, you will be cut off. Okay, that's one of the things you need to understand. Okay, and so 1:2 in combination with all of these things. I'll take time to still teach this strategy for a lot of our people who don't know how to make use of it. I think many of our people too are actually abusing it, don't know how to use it. But yeah, so if you look at it, 1:2 risk reward is already done here. Now giving you another buying opportunity. And so, but it didn't say buy, but because you understand this reference point, that's a very powerful reference point. Once you bring it out, I'm going to do it. So this is a power of 3, 2 there. Then when I return back to it. So even if I don't take this power of 3, once I see this reference point, I'm in. Now in here, and my stop loss, of course, below the reference point. I'm gonna be in here because I'm teaching. I will not be able to go back to manage my trade. 1:2 risk reward. Come on, hi God. So this is how many pips target, 20 pips. Then you're going to be targeting here or this reference point. This is a resistance or supply zone. demand, supply. So the markets will come to then look at the two things combined here again. It's combined with your psychological key level. Massive, right? And that's going to be 1:6. Oh my word. Yes, this is so crazy. I love this. So look at this. You can see now this is still struggling because of this demand zone. So you just have to wait for it. Somebody say, So this is lovely. To scalp, we have the tool to give you delivery of your scalping. Trust me, we have the right tool that's going to put the money in your hand. You're fine. You're making money. You're making money. So even if the market decides to be choppy all through month of December, January, February, you need Plan B Express cash flow solution to give you how to still make out money from the market. You got it? If you don't got it, forget about it. So have a nice time. If you are watching and you are not in Cash Flow Solution Club, you are not on Inner Code, then you have to, all right, so look at it now. It's already moving because it has taken out this, but you know that this is supply zone. See the move, the force is still massive. So imagine you are against this kind of trend. It's not going to be good at all. So if you are not on our group yet, I'm telling you, you are losing a lot of things. You learn things. Yes, you miss a lot. You miss a lot, guys. Thank you very much and do have a nice time. We have different scanner that I can still show to you, but this is powerful. I did this video not because of the scanners, but I did it for people who are struggling to do separating of analysis on their trading view, and then they are using psychological key level. So bye for now. My name is Medai Jimo. Look at the comment section and join our free Telegram group, and we'll take you on the ride. Let's go.